Hey guys, today's topic is bookkeeping. And as wedding planners, it's not a very fun or a fancy topic, but it's super important. And we really need to be vigilant about doing our profit and loss sheets every month and just making sure our books are in order. So I'm excited that Clarissa is going to be here with us explaining that. So Clarissa is joining us. Super excited. Just a little bio about her. She is an accountant, financial strategist who helps small business owners make sure that they are doing everything correctly in their business finances. Introduce yourself a little bit and just tell us your journey.
Okay. Hey everyone. So I am Clarissa. Yes, I'm an accountant. I've actually been in the accounting industry since I was in 10th grade in high school. I have 2 master's degrees in accounting, which are actually in forensic accounting.
Yeah.
And that's what I do in my business. My goal is just to make sure that the accounting stuff is as easy as possible.
Tell us why you need bookkeeping.
When you're asked for your numbers, whether you're looking to get a loan from a bank, you're looking to get a credit card for your business, you're looking to add investors to your business, and then even just file your tax returns. Like, you need that bookkeeping done so that you can actually file your returns and know what your numbers are. But then the other thing is, you should be doing it on a monthly basis so you know what your numbers are. Because if you don't know what your numbers are, then how do you know if your business is doing well or not? Okay, there's money in the bank, but that doesn't tell you whether you have a profit or a loss in your business. And when you have a profit in your business, then you have to pay taxes. So are you saving for those taxes? And when you know that profit, you know how much you should be saving. So there's so many things that come in when you do your bookkeeping that you don't even think about, because it's just not part of being a creative, really. Like, I get so many people that are like, but I'm creative. I'm like, okay, but you still have to know the numbers, whether you do it yourself or you outsource it to someone else to do it for you.
So what are the super simple and easy? What's your system?
So this is my favorite system, and every time I explain it to someone, they absolutely love it. So most of us run our business completely online. We don't do a lot of paper stuff. And that's what this system is completely online. You don't need to print out paper copies of anything. When I started explaining the system, I had someone come to me. They're like, wait, so I don't need this entire big binder to print everything out and keep it? I'm like, no. So what you do, so you get almost all of your invoices to your email account. One, create a folder in your email account by year. You always want to separate it by year. So we're in 2022. So you would create an account. 2022, I put, it can be revenue and expenses. It can be P&L. It can be anything along those lines. Anything that comes into your email account that's related to spending money in your business is going to go into this folder. And then you're also going to print each email. But when I say print, you're printing it as a PDF. So it's just a PDF. You don't need a paper copy. And then you're putting it in a file, whether it's in Google Drive, Dropbox, any of those other places, or even just on your computer. But make sure you have 2 copies, one somewhere, like say a cloud system or an external drive, and one on your computer if you save it on your computer, just in case something happens. Because when you have the paper copies, if you have a flood or a fire, they're all destroyed, and you don't have a copy of them unless you keep the emails.
How do you feel about bookkeeping through Honeybook Only? Are you
I've
familiar with
personally never
Honeybook?
used Honeybook, but I do
Okay.
use Dubsado, which is very similar. And it depends on if you are receiving money outside of Honeybook, then it's not always easy to add it in. If you're only receiving your money through invoices, in Honeybook, then I'd say you're okay with doing your bookkeeping just in Honeybook.
Okay.
So it depends on where you're receiving your income. Expense-wise, it doesn't matter where you do your bookkeeping through. When you use something like QuickBooks, Xero, or Wave, then it's not a problem. Your income's coming in from all of your different sources because you usually link your bank account.
So then all this keeping track of our books every month, that's all going to kind of get us ready for the end of the year where we have to pay our taxes, right? So what's your tip about that?
So why tax time isn't the only time you need to do your bookkeeping? So like I explained before with doing your bookkeeping, like you need to know your numbers at the end of every month. Do you have a profit? Do you not have a profit? Because you pay tax on the profit. You're not paying tax on the total revenue. You take your total revenue, you subtract your expenses, and then you have your profit, and that's what you pay tax on. Now, if you have a net loss where your expenses are greater than your revenue, you have a net loss, and then you're not usually paying taxes. Now, this depends, it's different state by state, but for federal, you're not paying taxes when you have a net loss. And for most states, it's the same as federal. But I know, Valerie, you're in California. California is a little different with their state taxes versus federal. That one I do know. So, and I'm in Pennsylvania. Pennsylvania is the same as federal. Most states, like I said, most states are the same as federal. Doing your bookkeeping on a regular basis is super important because when you file your tax return and you have never had to do quarterlies before, if you owe more than $1,000 on your tax return, it's automatically going to calculate quarterlies for the next year. So when you file your 2021 tax return here this year, you owe $1,500. You're automatically going to get 4 coupons. That's what they call them, coupons, to submit quarterly estimated tax payments throughout 2022. The first payment is due April 15th. So if you wait until April 15th to file your taxes and you get that coupon and you automatically have a payment due, you already know a little bit ahead of time that to expect that. Not really that lenient when it comes to making your estimated tax payments late. No, if you don't get the coupons, you don't really have to worry about it. But when you are looking at your profit and loss statement every month, take your total profit and multiply it by 20%. Does it equal more than $1,000? If it does, then you're going to want to make quarterly estimated payments on your own without the coupons.
Okay, so I would say that in like the wedding industry, we have seasons, right? So it's a very cyclical.
Yes.
If you, so usually
your
in spring,
typical busy time is between April and September.
yeah.
Quarterly payments are due April 15th for the first quarter, June 15th for the second quarter, September 15th for the third quarter, and January 15th for the fourth quarter. So the first quarter is January, February, March. The second quarter is only April and May. The third quarter is June, July, and August. And then the fourth quarter is September, October, November, December. So, yes, I hate their system. And I've actually told people the wrong dates, but because I didn't know, because I'm like, but that's not the quarters. Like,
Right.
their quarter system confused me. I've accidentally told people the wrong dates, but now I know their system. So you can run your income statement either monthly or do by quarter and multiply it by 20%. And then you would pay an estimated tax payment based on that if you think you're going to owe over $1,000. If you're not going to owe over $1,000, as in basically you have a net loss, then no, you don't have to make quarterly tax payments. If you owe more than $1,000, you are charged fees for not making estimated tax payments.
Because I've always done this, and I don't know if I've been doing it wrong. This is interesting. I've always just paid it at the end of the year, like, because that's what
has it been more than $1,000 that you've owed?
Probably, yeah.
Do you have income from another source?
No.
Okay.
Because my husband, right? So we have a joint account. So.
And does he work a W-2 job?
He does, yeah.
Okay. So that would be why you weren't charged those extra fees.
Okay.
Because usually because you're technically paying estimated taxes when your husband is making his payment with W-2 payments.
Interesting.
Sometimes it's weird. It's a stupid system, but if you don't make your estimated tax payments, you owe more than $1,000, they do charge you late fees for not making your quarterly payments on top of what you owe.
Yes.
I'm actually in the process of trying to make a chart for whether you should pay an independent contractor a 1099 or not. So let's look at this. Trying to think of how I want to explain it.
Well, okay. I know what I've learned is that $600 or more that you've paid them in the year, then you need to 1099 them, right?
But there's other things that come into play.
Like W-4 them, or what is it? Yeah.
So you issue them a W-9 to get the information to prepare a 1099. If you paid them more than $600 throughout the year. But if the payment was made through Stripe, PayPal, Venmo, Zelle, you do not need to issue a 1099 because those systems are already issuing a 1099 for you.
Really?
Really. I actually got into an argument one day last week with another accountant because I was a government auditor where you used to have to do both. So even if you did pay them through one of those options, you still had to issue them a 1099. Because of the changes that have happened this past year, if you paid them through one of those 4 systems that I just mentioned, you do not need to issue the 1099 because those systems are issuing 1099s because the IRS has changed their system. So those systems didn't used to have to issue a 1099 unless you received $20,000 and 200 payments.
Wow.
But now the IRS lowered it to if you receive $600 in any of those, doesn't matter how many payments. If you receive $600, then you will get a 1099 from them.
Wow.
So Venmo will send the independent contractor the 1099. Do you get a copy? No, you don't get a copy of that because Venmo is sending the independent contractor a 1099 for everything you paid them and everything everyone else paid them. What you need to have on hand is the invoice that you received when you made a payment. That is your proof that you didn't need to issue a 1099.
Wow.
Okay, so let's go back to this. So you pay someone $600, over $600 or more dollars a year. Then you're supposed to issue a 1099. If you paid through PayPal, Stripe, Venmo, Zelle, there might be a couple other ones in there, but those are the main ones. Then you do not need to issue the 1099 thanks to the way that the IRS changed the requirements starting January 1st, 2022. If that, so, and then it falls into that. Then you would give them a W-9 and ask them to fill out the W-9 for you. On this W-9, you need to make sure that it's completely filled out, has an EIN or a social security number. I recommend getting an EIN anyway. Even if you are a sole proprietor, the EIN is free. That way you don't have to give out your social security number to anyone. That was a little side note. So it has to be signed, has to have their name, their address, and their EIN or social security number, and the type of business they have. So a sole proprietor, LLC, or a corporation. If they have a corporation, you are not issuing them a 1099 at all. Corporations do not get a 1099. Only pass through type businesses, which are sole proprietors and LLCs, get a 1099.
So at the end of the year, because was it like at the end of January, right? Those 1099s.
They must go to the independent contractor by January 31st.
Okay. And so if you've been paying through Stripe and all those, they will send that to them. Is that
Correct.
what I'm understanding?
Yes.
So because we used to have to do like I have a copy, the government has a copy, they have a copy, right? And you have to like buy those forms from.
Yes.
So you don't have to do that anymore. Is that
Correct.
what I'm hearing? Oh my God, that's amazing.
Correct.
That's amazing. And I know if you are in my email list, you all got her wonderful, fabulous freebie, which is the CFO Starter Toolkit, which is a free download. So what was inside of that?
Okay. Can you see my?
All right. And I think I can share. Yes.
There.
Yep.
Okay. So this is what the toolkit comes as it comes as a Google spreadsheet with templates. So there's videos explaining each one of these templates, and then there's a different tab for each template. So there's a basic budget calculator for your business. So you put your income up here, your expenses down here, and then it gives you an estimated profit or loss. A budget for paying yourself. So you would list all of your expenses and how much they are, so you can figure out the minimum amount you need to pay yourself at the end of every month. So your revenue goal calculator, so you would plug in how much you want to pay yourself. So if you go to this one, your personal budget, this is the minimum amount you need to pay yourself. So you can take this number and you can put it here, or you can even raise it a little bit more. So say you want to pay yourself $2,500, so you have extra money. And then it'll come down here to calculate how much you need to make in your business to be able to pay that, your monthly business expenses, save 20% for taxes, and then save 1% of your profit to keep in your business. And this is what you would need to make in your business to meet these goals. You can change all 4 of these numbers however you want. If you are out and about shopping for stuff for a wedding and you stop and get lunch, that lunch is not tax deductible. You prepare a meal at home, or you order in because you don't have time to cook a meal. The cost of that is not tax deductible. Normally, meals are 50% deductible. For 2021 taxes, they are 100% deductible as long as they are business meals.
Oh,
yes, potential client meals, like if you meet for a consultation, yes, those meals would count as a business expense. For home office expenses, if you are a LLC or a sole proprietor, you can get the home office deduction. Corporations cannot take the home office deduction. You would not put your home office expenses into your bookkeeping software. Keep a spreadsheet of them somewhere else, and make sure you keep copies of the bill every time you pay it.
So with like cell phone, like our cell phone bill, where we use it for
your cell phone
personal
bill, your rent,
and
your mortgage, home insurance, electricity, water, your internet. Keep copies of all of those, put them all in a spreadsheet. My Core Painless Tax Prep comes with a full explanation of the home office deduction and a spreadsheet to plug all of this stuff in, and it does the calculation for you.
good to know.
Big no-no deductions that could red flag the IRS. So, what most people don't know, there really aren't that many no-no deductions that'll red flag the IRS. But clothing and hair and makeup, they are red flags. Those are usually not business deductions anyway, because that is for your personal stuff. Clothing is considered a deduction when it's something that you have to wear for your business that you cannot wear somewhere else. The easiest explanation for this is to think of a mechanic that works at a car shop. The suit that they have to wear over top of their regular clothes, that suit would be deductible. Hair and makeup, the only way those are deductible is if you are getting your hair and makeup done and going directly to a photo shoot, or you're going directly to something where you have to have your hair and makeup done. You get your hair and makeup done before a wedding, but you're not in the wedding, then no, it's not deductible.
Interesting.
Okay, nice? Car payments, would that go under home office? No, that wouldn't. And then travel, gas, and mileage. So there's actually a separate form for business use of your car. That's outside of the home office deduction. Again, this still wouldn't go on your profit and loss statement if you are using your car for both personal and business. So when you're using your car for both personal and business, on January 1st, you want to write down your odometer. And then again, December 31st, January 1st of the next year, you need to write down your odometer. Every time you drive for business use, you don't have to do this for personal, but every time you drive for business use, keep track of your mileage. You have an option of doing your mileage or your gas and repairs for your car expenses. The mileage usually will get you a better deduction over the gas and the repairs. You have to pick one or the other, but no matter which option you choose, you still have to track the mileage so that you know what percentage is business use and what percentage is personal use. But like I said, the deduction is usually much better when you do the mileage versus the gas and repairs for a deduction. Car payments, they don't count towards this usually at all. And neither does car insurance, because it all falls under the mileage deduction when you're tracking your mileage.
Well, good information. Very good information. Clarissa, thank you so much for joining us today. That was so informative. So, like I said, if you were on my email list, you definitely got that link to that free download. Thank you so much.
You're welcome.
Your time and your energy. Thank you.